Alright, now let's get to the fun part, which is the charts, which is learning about the trade setups that you can spot in the market in order to trade profitably. And once again, when I trade crypto, I only care about these 3 clean, high probability setups. If you can just master these simple setups, you will never look at trading the same ever again. You won't be relying on any indicators or complex strategies. And I like to believe that simplicity is the ultimate sophistication. Anybody who tries to sound clever, who tries to make trading sounds extra confusing, is trying to sell you something. Because they are trying to make it sound like it's so complicated and confusing so they can buy their course. So that you can actually buy whatever that they are selling, right? For me, I believe that simplicity is the highest form of intellect. It's not trying to sound smart or trying to sound intelligent, but the ability to simplify a complicated concept in a way that a 5-year-old can understand is a skill that many people lack because they don't understand the concept enough, right? So I'm going to share with you these 3 strategies, and I'm going to simplify each strategy down into 3 steps. Once again, because I understand this shit because I live this thing every single day. I actually trade this, right? So if your trading guru cannot explain his strategy in 3 sentences, he doesn't have one, all right? He is a fake guru. All right, so first of all, let's look at the trend pullback strategy. This is the simplest. This is pretty much like my bread and butter. Basically, what you want to understand is that price will never ever move up or down in a straight line. It has to breathe. It has to create this natural ebb and flow. You know, it has to breathe in, breathe out, breathe in, breathe out. So price is not going to do this. Price will go up, create higher highs, higher lows in an uptrend, all right? It would move in like this zigzag manner. And a downtrend, price will create lower highs and lower lows, right? So once again, this just means that price is pretty much going down and the sellers is in control of price, pushing the price down. That's it, all right? Higher highs, higher lows. And if price is not creating higher highs or higher lows and it's just in a consolidation just like this, then we know that there is no trend, okay? Price is just in a consolidation. There is no clear trend direction. So the first step is always identify the trend direction. So if I'm looking at this chart right here, I can see that the buyers are obviously in control of price since price is going up, right? And how do we know price is going up? Well, we look at the structure and we see that price has created higher high, higher low, higher high, higher low, and potentially create like a higher high right here. So this is where you can potentially mark the break of structure at the price point where price actually broke past the last swing high. Okay, so that's the bullish break of structure right there. And then later on, price has taken out this swing high right here. And I prefer if the candlestick actually close. If the candlestick actually close above this swing high right here, that's how I define as a valid break of structure. If it's just a candlestick wick break just like this to me is not really like valid, all right? This could just be a liquidity sweep. So let's continue to observe what price does. There we go. We got a candlestick closing above the high. That is a valid break. So that's the first step. Identify the trend direction. So we have established that right now we are in a bullish trend direction. The buyers are in control of price, which means that we want to trade with the trend direction. Which also means that demand is in control right now, all right? Demand, not supply. So if that's the case, I want to be marking up the demand zones, which I'm expecting price to pull back to create like a high low before continuing to the upside. So if I'm looking at the chart just like this, I want to mark up all the demand zone. The demand zones that actually break structure. And I always start off from the extreme, right? So you look at the extreme low right here, the lowest low that led to the break of structure, and you begin marking up your demand zone, right? So there is one demand zone right here. Price came down, started reversing, and then came down, mitigate this extreme demand zone, started pushing up again. So this is where potentially you can draw another demand zone right there. And then since then, price has went up, make a tiny pullback before going up again, right? So that's another little demand zone right there. Okay, so I'm not really going to go too deep into how to actually properly draw supply and demand zones. I've got countless of videos on that on my YouTube channel, so go and check that out if you don't understand how to draw supply and demand zones properly. But there it is, right? You got the extreme demand zone, followed by this demand zone right here, and then this demand zone. It's basically the zone where there's like this reversal, right? From sellers to buyers, right? You can see clear as day, reversal, buyers take back control of price, price comes down, reversal again, buyers take back control of price, price goes up, and then comes down, buyers take back control of price again, right? So it's pretty much like those zones where you can pretty much see signs of reversal. So now, all you want to do is to wait very patiently for price to pull back to either one of these point of interest right here, either one of these demand zone. The reason why is because, like I said, price will never ever go up in a straight line just like this. Price will have to go up, pull back, create like a high low before you go up even further. And you don't want to be buying right here, Because if you're buying right here, you are going against the internal structure, which pretty much states that price is potentially making a pullback right now. So if you're entering right here, you might be right in the trade ideal. You might be right thinking that price is going to go up even further, but you're going to be wrong in the short term, because in the short term, price is technically still bearish, which is also why we relax. We don't do anything until price mitigate our point of interest, right? So let's continue waiting. Price come down to our near demand zone right here, but does this demand zone, look at it. Does it? No. Price just blast right through it. So at this point of time, it just tells us that supply is still in control of price. We are still in the pullback phase. Okay, so we shouldn't be looking for longs. So since this zone has failed, I'm just going to delete this noob zone right here. So cool. Now, we just continue waiting, right? We continue waiting for price to actually mitigate the next zone. Cool. Price has mitigated this zone right here. It never really mitigated it. It never really touched it. And it just started pushing to the upside. And reason being is because it doesn't have to mitigate the refined zone, right? So what happened right here was that if I were to actually mark up like this demand zone right here, I'll mark this entire pivot instead of like this extreme zone, right? So this entire pivot right here, this actually constitute as a valid demand zone, right? So the minute price actually mitigated this valid demand zone, this is where you can potentially enter upon the mitigation of that demand zone itself, right? You can enter for a long order right here. The minute price actually mitigate that, place a stop loss below the demand zone and just target to like maybe somewhere around here, all right? And you can see eventually price started consolidating, right? And then it eventually went up there and smashed a TP. So the thing is, even if you fail to actually enter upon the mitigation of this pivot zone itself, right? Because you actually you actually put your demand zone as like this refined candlestick right here. Guess what? Later on, you still got tapped into the trade, right? So you can see price came down here. Later on, mitigate our extreme demand that we have marked up right here. This is where easily could have entered for longs right here upon the mitigation of the zone. Place a stop loss below that low and target 3R just like this, right? So either way, you would still be tapped into the trade itself, all right? Once again, very, very simple strategy. No rocket science, just purely trading price action, right? So just to recap, basically what you want to do is to identify the trend direction. You want to wait for price to pull back to a point of interest, and you want to wait for price to sweep liquidity. I forgot to mention about the sweeping liquidity part, right? But in this particular case itself right here, when price actually pulled back to this zone, did it sweep any liquidity? Yes, it did, right? Because at this point of time, price came down here, mitigated our demand zone that we have on the left-hand side right here. And when it does this, retail traders are going to be entering for longs. They might think that this is the new high low that is being created right here. So they enter for longs right here at this reversal. They place the stop loss below this low here, right? So that's just available liquidity being built up. So that did not work out because later on price just went down there, swept that liquidity before the real move actually happens. So that itself is a liquidity sweep. So always want to make sure that you only enter upon a liquidity sweep. Next, price later went up, pull back to our extreme zone. This time around, did it sweep any liquidity? Yes, it did. If you look at the left-hand side, price actually came down, swept the liquidity that we have below this low right here. So for the retail traders who enter for long right here, guess what? They're going to be placing a stop loss below this low. So clear as day, price gravitated towards that and triggered all the stop orders, the different stop orders, grab some liquidity before they actually cause price to reverse to the upside, right? So this is pretty much like a non-negotiable. You must always wait for a liquidity sweep because liquidity essentially acts as fuel for price to actually move to the upside, for price to actually get sufficient momentum. And it pretty much allow us to spot smart money footprints. Now, just to give you like a bonus tip, if you look at the left-hand side, what do we have? We got price coming down here. And when price is pulling back over here, guess what? Creating some available liquidity. Later on, price came down. Price came down right there. Swept all the available liquidity, create this sharp V-shaped reaction, right? Swept the liquidity below these lows, and it also swept the liquidity below this low here as well, before price actually goes up. And before price actually went up, guess what? It came down here and mitigated the demand zone that swept liquidity before it actually went up. So this is pretty much an institutional demand zone, right? That right there is an institutional demand zone, which also means that over here, price is gravitating towards that institutional demand zone that is unmitigated. This is the first time around institutions actually got into Bitcoin. This is the second time round. And this is the third time round, right? So you can see this is where they start scaling in. And guess where's the fourth time round? The fourth time round is going to be the demand zone that swept liquidity, the most recent demand zone that is unmitigated. And where will that be? Where shall that be? Well, look at what we have. Price swept liquidity below this low right here, and then started pushing to the upside, right? So sharp V-shaped reaction just like this. So that's a liquidity sweep, which also means that there is a demand zone that can be marked up right there. So this entire thing will be our demand zone that swept liquidity. and observe what price does. Price went up, pull back to the demand zone, there's sub-liquidity, huge buying momentum set to the market and caused price to just absolutely skyrocket. This is what happens when you understand liquidity. So even if you miss your entry right here, you miss your entry here or here, right? I mean, if you miss your entry here or here, guess what? This would be your third opportunity for you to actually enter for a long position. And guess what? Where is price going to gravitate towards next? It's going to gravitate towards this new demand zone that is being created right here. And then this is where you can start to see price will potentially come back, mitigate this zone, and continue going up. That's how powerful the trend pullback strategy is. Ta-da! Magic. As simple as ABC. Like I said, man, like if your trading guru cannot explain his strategy in 3 sentences, he doesn't have one. All he has is something to sell you. All right, so cool.